Welcome to the deep dive. Today, we're tackling something lots of you might be looking at for long-term planning. The potential risks, the downsides of investing in a silver IRA.
Right, you're maybe considering a Silver IRA, perhaps to add a bit of diversification to your retirement funds.
Exactly. And our aim here is to give you a really clear view of what you need to watch out for.
Yeah, we're drawing on an article, What Are the Risks Associated with Investing in a Silver IRA? By Doug Young. He's got a lot of background in finance, commodities, precious metals.
A solid source.
Definitely.
Mhm.
And our mission really is just to pull out the key things to think about, the potential pitfalls, if you're seriously considering a Silver IRA.
Okay, let's jump straight in then. The first big one when you talk metals is volatility, right? Those price charts can look pretty wild.
That's a good way to put it. The article really stresses that silver prices aren't stable. They can swing quite significantly.
And what drives that? What
Yeah.
makes the price move so much?
Well, several things. You've got basic supply and demand, of course. A lot of silver gets used in industry electronics, solar power,
Oh, right. Industrial demand.
huge factor. Then there are the wider economic conditions, things like inflation, currency values,
Okay.
and geopolitical stuff, trade wars, political uncertainty.
Yeah.
That can all shake things up, too. It's not just about what investors think. It's tied to real-world events.
Right. So it's complex. It's not just sentiment driving it. Did the article give examples, like historical ones?
It did, yeah. Looking back helps put it in perspective. Like during the 2008 financial crisis, silver prices actually shot up.
Really? Well, everything else was tanking.
Yeah, investors saw it as a kind of safe haven asset then. But, and this is important, it doesn't always react that way in every downturn.
Okay, so it's not a guarantee, a specific reaction to that crisis.
Precisely.
Yeah.
Then fast forward to 2011. Silver hit almost $50 an ounce. Huge spike.
Wow. $50. Why then?
A mix of things. Economic uncertainty was high, plus strong demand, both from industry and investors. But here's the kicker.
Uh-oh.
By 2014, just a few years later, the price had dropped back down to around $20.
$20 from almost $50. That's quite a drop.
It really highlights how fast and how far the price can fall. It's a stark reminder, really.
So for you, the listener, understanding that kind of potential swing is absolutely vital before you even think about putting retirement money into it. Doesn't sound like a set it and forget it kind of deal.
Not really, no. Which leads us to the next risk the article flags. Counterparty risk. Maybe less obvious, but just as critical.
Counterparty risk. Okay, break that down for us. What does that mean for a silver IRA?
Basically, it's the risk that someone else involved doesn't hold up their end of the bargain. So maybe the Silver IRA company you use, or crucially, the custodian who holds the actual silver.
Ah, the people actually handling your metal.
Exactly. The risk they might fail to meet their obligations. The article really emphasizes checking out your custodian very carefully.
And what do these custodians actually do?
They're responsible for physically safekeeping your silver.
Yeah.
And making sure everything's compliant with IRS rules. Secure storage, handling the admin, the record-keeping, reporting, all that.
Right. And I bet that costs money. Fees.
Oh, definitely. And storage fees can vary quite a bit between different custodians and the depositories they use. It's something the article points out. You need to compare these, understand them, because they eat into your returns.
So transparency on fees is key. No nasty surprises later.
Absolutely. You need to know exactly what you're paying for.
When you're picking a custodian then, what should you look for besides just, being around for a while? Any specific credentials for precious metals IRAs?
Well, reputation and experience specifically with these kinds of IRAs are big ones. Look for a solid track record, good reviews, and crucially, make sure they're fully up on IRS rules and have really strong security measures.
Makes sense. You want your actual metal safe, and you want the paperwork done right. The article mentioned IRS-approved depositories, too.
Yes, that's a must. The IRS says the physical silver has to be stored in one of these approved places. You can't, keep it in a safe at home.
Okay.
These are specialized, secure facilities that meet very strict IRS standards for handling precious metals in retirement accounts. Understanding their storage options adds another layer of security check for you.
Right. So we've got the price swings and the need for a trustworthy custodian. What's next on the risk list from the article?
Regulatory risk. The IRS, well, they have very specific rules for silver IRAs. Getting those wrong can be costly.
Yeah, I can imagine. Dealing with the IRS is already complex. Adding physical metal probably doesn't simplify things. What kind of rules are we talking about?
Key things include the type of silver you can hold. It's not just any old silver bar.
Oh,
Yeah, there are strict purity standards, usually 0.999 fine,
eh.
and only certain coins like American Eagles or specific bars qualify.
So investment grade stuff only.
Exactly. And then there are rules about how distributions are taxed when you eventually take the silver or its cash value out in retirement.
And if you mess up, if you don't follow these rules,
Penalties, potentially significant ones. The article gives a clear example. Say you take your silver out before you're 59 and a half, you're likely looking at a 10% early withdrawal penalty.
ouch.
Plus, you'd still owe regular income tax on it. That 10% hit could really matter, especially if you unexpectedly need those funds.
Yeah, that's a double whammy. So the message is know the rules inside out or get help from someone who does.
Definitely. The article strongly recommends staying informed, maybe talking to your Silver IRA company, the custodian, or ideally a tax professional who understands this stuff.
Okay, so market risk, counterparty risk, regulatory risk. Got it. Is there more?
One more main one, liquidity risk. Basically, how easy is it to turn your silver back into cash when you need or want to?
Right, liquidity. Always
Yeah.
important, especially for retirement funds you might need to access eventually. How does silver stack up there?
Well, the article points out that market conditions play a big role. If the economy is shaky and people are tightening belts, demand might dip, making it harder to sell quickly at the price you want.
Okay.
On the flip side, if the economy is booming, demand might be higher, making it easier to sell.
So it flows with the economy again. But selling physical metal, that sounds different than just clicking sell on a stock.
Exactly. It's not like stocks or bonds. You need to find an actual buyer who's willing to pay your price. That process can take time,
Yeah.
especially if the market's slow. So the article really stresses you need to factor that in. Be comfortable that getting your cash out might not be instantaneous. Plan for that potential delay.
Okay, that's a really practical point. So we've laid out the main challenges. The price volatility, finding a good custodian, navigating IRS rules, and this liquidity issue. Does the article offer ways to, manage these risks?
Yes, thankfully it does. It talks about several strategies to help mitigate these potential problems.
Good. Let's hear them. What can investors actually do?
Okay, first up is something called dollar cost averaging.
Ah, I've heard of that.
Right. Instead of investing a lump sum, you invest a fixed amount of money regularly, say, every month. Doesn't matter if the price is high or low,
How does that help?
it smooths things out. You buy more silver when the price is low and less when it's high. Over time, it averages out your purchase price and reduces the impact of those big swings. Though it's worth noting, if prices are generally rising, you might end up with slightly lower returns than if you'd invested it all at the start. It's a trade-off.
Okay, managing volatility. What else?
Insurance. The depository where your silver is stored will usually have insurance included in their fees.
Right.
But the article suggests you should really check the details of that coverage. How much is covered,
Yeah.
against what? You might decide you want extra insurance just for peace of mind.
Especially with a physical asset. Makes sense.
Definitely. Then there's a really fundamental one, diversification.
Don't put all your eggs in one basket.
Exactly that. The article reinforces spreading your investments across different types of assets, stocks, bonds, maybe real estate, and potentially precious metals like silver.
So the Silver IRA is just one piece of the puzzle.
It should be, yes. If one part of your portfolio isn't doing well, the others can help balance it out. Understanding how silver tends to move relative to, say, stocks can help you see why it might diversify your holdings.
Good point. What else?
Due diligence. We touched on it with custodians, but it applies across the board.
Doing your homework.
Thoroughly. Research the Silver IRA companies, compare custodians, understand the storage options, make sure everything aligns with what you need and meets all those regulatory requirements we talked about. Don't just rely on flashy ads.
Solid advice. Anything else?
One final recommendation. Talk to financial experts. A qualified financial advisor can really help.
How so?
They can give you personalized advice based on your situation, your goals, your risk tolerance, help you fit a Silver IRA if it's right for you, into your overall plan, navigate the rules, maybe optimize performance.
So getting professional advice could be really valuable here.
It often is, especially with something like this that has specific rules and risks.
Okay, this has been incredibly helpful. So just to recap quickly for everyone listening, we've looked at the risks. Silver's price can be very volatile.
Big big swings are possible?
There's counterparty risk, so choosing a trustworthy custodian is vital.
Absolutely key. Check them out thoroughly.
You've got to navigate the specific IRS rules carefully to avoid penalties.
Yeah, compliance is non-negotiable.
And selling your physical silver might not be instant, so there's liquidity risk to consider.
Right. It can take time to convert back to cash.
But we also talked about ways to manage these. Things like dollar cost averaging,
To smooth out prices.
checking your insurance coverage,
Yeah, maybe getting extra.
diversifying your whole retirement portfolio,
Don't rely solely on silver.
doing thorough due diligence on everyone involved,
Research, research, research.
and potentially getting advice from a financial professional.
Which can really help tailor the strategy to you.
So for you listening, if you are thinking about a silver IRA, the big takeaway is to go in with your eyes open, understand these risks, have a plan to manage them.
Exactly. Which brings us to a final thought for you to ponder. We know precious metals like silver can be volatile. So the question is, how might fitting silver into your broader retirement strategy actually align with your personal tolerance for risk and what you want to achieve financially long term? Something to think about.